Some of you guys are going to think I'm crazy, of course, and certainly wish we had Netflix. I mean, we had Netflix a couple of times last couple of months and did pretty well with it. Wish we had that one, but you can't play them all, right? Can't marry all the girls. I know Doug Peachy can, but not me. Okay, so ISRG. Thank you, David. I'm gonna put that one up here. Thank you very much. In Priceline here. Now, why do I like this one here? Let's take a look at this chart and see if we can figure something out. Okay, you see that November resistance over here? We just passed it the last couple of days, so I think this one's got some good juice left in it. We filled this gap here. We hadn't filled the gap in November, early December. We just missed it, but now we just missed it here today too, didn't we? 679. Oh, I guess we did beat it today because we hit 681. Okay, this one looks like it's got some more gas left in the tank. I'm thinking 700 on this one here. So let's take a look at its options setup on this one. All right, I'm going to bring my montage up here. Let's take a look at it. Earnings out in the beginning of February. Okay, we don't want to do the weeklies because they will expire before. Let me take a look at the earnings here in a minute. Expedia looks actually pretty good as well too. They're in the same boat. Looks like somebody help me out with this one. I want to say second week in January. Second week in I want to say the second week in February. Okay, so this one should expire. Is it February 25th? Is that right, Roger? Okay, I'm wrong. So let's look at the March. Okay, of course you could probably play up until and get a lot of juice in some of these calls. If you want to play the straight calls, they're always really expensive because it's a high price stock, right? But we can see the implied volatility for March is 32. For February, it's 22. Look at that volatility; it's really low, right? So I think Roger, I think you're right, because the implied vol is about 50% higher in March. So what type of setup do we want to look at here? I'm thinking out of the money call spread here, maybe like a 20-point spread. So let's take a look. Let's try and build something together, okay? Let's say we're looking at like the 685, 705s, right? So here we got the 685s are about $30. It says $29.90 by 30. And it was pretty active today. Look, you can see that 418. There was only 2 in the open interest. So that's a nice delta, 49 delta over there. Okay, so you take a look at the 685s. That's $30, right? And then we're going to sell the 705s. Although that's going to be a little bit more difficult. The open interest is quite a bit lower. So $22. $22. So that's an $8 spread, right? Because we're paying 30, and we're going to sell for 22. So that's an 8-point spread. On a 20, that's $8 for a 20-point spread. So we're basically getting, what is that? 1.5 to 1, right? If we're right, if it gets over 705, I think you're in there for the earnings, right? You're in there for the payoff after earnings. Are you willing to risk $8 to make 20? Why not? Right? Again, it's almost 1. It's 1.4 to 1, right? So if we're right, you're gonna make 1.5, almost 1.5 times on your money. You got to be smart. You got to be prudent on something like this, right? So if you play something like this, and I do this all the time, okay? Just be reasonable with the amount of contracts you're going to do, okay? $800 for one spread, okay? Not all of you are sitting on millions of dollars in cash, okay? Neither am I, okay? So I'm going to spread it out maybe 1, 2 contracts. There's no shame in doing 1 or 2 contracts, okay? Especially when you've got, you know, $800 to $1,600 on the line on one play and we're out of the money, right? Again, we're not, you know, I mean, we're not playing the game of Wipeout here. Everybody's seen that show before, okay? We don't all have to have big balls to play the game of options, okay? We can be small, we can be prudent, we can play 1 contract, we can play 1 spread. It doesn't matter, okay? As long as we're participating, right? And we don't want to get wiped out. If we're wrong, so what? For 1 spread, I'm going to lose $800. Okay, I'm going to say ouch. But as David says very, very clearly, and he's absolutely 100% correct, defined risk. Define your risk, okay? You want to go short puts naked? Good luck, okay? Because I've seen this thing take out people in a body bag. People who are short and people who are long. This thing. You want to go short calls? You think the stock isn't going to go past 700? Good luck on that one too. Nice premium up there. Look, I mean, look at the board here. 700, 725, 735. Okay, I saw some people taken out on a body bag, out on a stretcher, short this thing 50, 70 points higher than it went out the day the earnings came out. Okay, the following day the stock was up 80 or $85. Forget it, people. Don't even play that. So, like David said, define your risk. If you're like me and you believe that the stock's got some upside here, let's do it. Okay, play one spread, maybe 2 if you want to feel a little bit risky here, and then we go and you've got some action going into the earnings. Okay, makes sense. Okay, so let's say as David said, ISRG was a good one. Let's take a look at that one.